Over the last 72 hours, the world's watched the United States launch airstrikes on Iran's nuclear sites. Iran's leaders are responding with threats to close the Strait of Hormuz, which is a single bottleneck that moves nearly 20% of the world's oil. Global markets are once again feeling the uncertainty ripple across every sector in the market. Will energy prices explode? How will nations react? These are the questions everyone's asking, and nobody knows how this chapter will end. But the stakes couldn't be higher. History shows that in moments of crisis like these, opportunities move quickly. While many are glued to the TV and the headlines and the news, the world's biggest financial players are already making moves, repositioning, moving their capital, and looking for new ways to stay ahead before the story unfolds. Because we also know that historically, during times of war, the market actually booms in certain sectors. So more and more, these top financial players are looking to assets with hard limits, like Bitcoin, which can't be printed out of thin air, all while at the same time, they are making strategic bets on other alternatives, from Ethereum to the new projects driving the next wave of the crypto market. Today, we'll break down why this moment could redefine what's possible for every single investor in the space, including yourself. You'll see where the setup is building for Bitcoin and Ethereum, and why altcoins could be about to offer the best entry point we've seen in years. So if you want to see where the market is actually headed, stick around. This episode is for you. So let's get into it, and happy Monday, by the way. So let's get into it. Let's first start talking about the Strait of Hormuz, the energy choke point of the world, you could say, arguably, although we'll get into more details on this here. Because we know that in the past few days, we've seen some of the most dramatic geopolitical news of the year. The United States, as I was saying a few moments ago in my intro, launched airstrikes on Iran's nuclear sites. Almost immediately, too, Iran's leaders responded with fierce threats, and their parliament went so far as to vote closing of the Strait of Hormuz, which is a single narrow sort of canal that has tremendous global importance when it comes to the global trade of oil. So what exactly is the Strait of Hormuz, and why does it matter so much? So picture a bottleneck for the world's largest energy supply. The Strait of Hormuz is a narrow waterway that connects the Persian Gulf to the open ocean. Every day, nearly 20% of the global oil passes through this tiny canal. We're talking about millions of barrels of oil shipped from the world's largest producers in the Middle East, traveling through a passage only a few miles wide at its narrowest point. So whenever there's war talk or military action around this area, global markets pay very close attention, because if the Strait of Hormuz were ever blocked or even just threatened, the flow of oil could be disrupted overnight. This means energy prices could jump sharply, shipping costs would rise as well, and everything from gasoline to food could quickly get more expensive, since everything ultimately gets transported with the use and thanks to oil, powering the vehicles that help us move food and other goods from point A to point B. And we've already seen some reactions to this news. Oil prices have started to move, but so far, the global markets haven't fully priced in the risk. Stock index futures are only down slightly, and oil is up less than 3%. This calm could change in an instant if tensions escalate or if real disruptions begin. And for investors, this creates uncertainty, not just in energy, but across the whole economy. In moments like these, some people look to safe havens, including assets like gold and increasingly Bitcoin too. The logic is simple. While confidence in the old financial order is shaken by war or crisis, alternative assets can catch a wave of demand. But here's the truth. Nobody can predict exactly how Bitcoin, crypto, or even stocks will react if the situation gets worse or if it cools down. We're living through a fast-moving story with a lot of unknowns, from the potential of wider conflict to the response from other countries. For now, what matters most is staying informed about how macro events like the Strait of Hormuz that we're talking about here can ripple through the entire financial system, including crypto. So this is why we track these developments so closely. Our goal isn't to call the next price move or pretend we know exactly what comes next, because we don't. I don't. It's to help you see the bigger picture based off of what we do know, so you can make smarter decisions in a world where headlines and media and history and different intentions are all unfolding at the same time. So right now, while the whole world is bracing and holding their breath, just waiting to see what happens next, there's a shift underway that most people are missing. Only the biggest investors in the world know what's happening right now. So I'm here to bring this to you because the biggest financial players or investors, they're not just waiting, they're making strategic investment decisions, and so should you. So what are they doing in face of all this uncertainty right now? Well, let's take a closer look at what's happening with Bitcoin, because we know everything in the crypto market rises and falls according to Bitcoin. Right now, there's the biggest accumulation in history happening for Bitcoin. While the whole world is transfixed by war and oil news, a quiet few are on a shopping spree right now. And it's happening behind the scenes, beneath the surface in crypto. The largest Bitcoin whales and the world's most aggressive financial institutions are stacking up Bitcoins at rates that's turning heads across the industry, completely unprecedented. This isn't retail FOMO. We're seeing whale wallets and institutions adding hundreds, sometimes even over 1,000 Bitcoin in a single transaction. And collectively, or all together, thousands of Bitcoins are moving into these big hands, into these big holders at a pace most investors could never imagine. Major players are on the move. We see institutions or companies like Strategy, owned by Michael Saylor, buying even more Bitcoin during these times, pushing its holdings now to above 576,000 Bitcoin. That's over 2.7% of the entire Bitcoin supply. Health tech company Semler Scientific is aiming to turn a modest 3,800 Bitcoin position into a jaw-dropping 105,000 by 2027, appointing new leadership to make it happen. And over in Japan, Metaplanet just purchased another 1,111 Bitcoin, bringing its balance sheet up to 11,111 Bitcoin. I do love that number. On the national front, El Salvador continues to add to its official reserves as well, buying Bitcoin regardless of market volatility or talks of war. And it's not just about the names we see in the headlines in the news either. Data shows wallets holding more than 1,000 Bitcoin are on the rise. These whales, these entities with capital to move markets, are quietly shifting coins off exchanges and into long-term storage. Meanwhile, Bitcoin's dominance in the total crypto market is the highest it's been since January of 2021. This means in uncertain times, more investors are betting on Bitcoin over everything else in the digital asset space. And don't let the latest market chaos distract you. As sad as it is, frankly, I've had to turn away a few times this weekend watching the news because it's just painful and horrific to understand what's going on. But in the last 24 hours, over $1 billion in crypto trades were liquidated after the most recent geopolitical shock. Yet the big buyers, they keep accumulating. They're unfazed by the price swings. This relentless appetite is painting a clear picture. Something massive is brewing, and these smart money investors, these whales, they know. But all this buying comes with a consequence. As more and more Bitcoin changes hands and disappears from the open market, the foundation is being laid for a once-in-a-generation supply squeeze. And this supply story is what is about to change the game for everyone forever. So let's talk about the Bitcoin supply shock, the strategic reserve era, because right now Bitcoin is being bought and locked away at a pace that's changing the structure of the entire market. Only 21 billion will ever exist. Remember that. My last video, I talk about this in my last video. Of those, more than 19.7 million have already been mined or created. And experts estimate that at least 3 million are lost for good, forever lost. So this leaves fewer than 18 million Bitcoins for the world, with the available amount shrinking every single week. The supply that's actually up for grabs is disappearing fast. On-chain data shows record amounts of Bitcoin are moving into cold storage off exchanges and getting locked away in wallets that almost never sell. We're currently, right now, at a multi-year low for liquid supply. And new demand is only accelerating the squeeze. Governments are stepping in right now like never before. Texas, for instance, just signed a law creating a strategic state Bitcoin reserve, so public funds can move directly into Bitcoin. And El Salvador's national accumulation keeps growing, with more coins added each month. Major corporations are racing to secure their own reserves, following the lead of Strategy, Metaplanet, and others. So it's not just government and corporate buyers creating this scarcity right now. The explosion of spot Bitcoin ETFs is draining supply at an unprecedented rate. BlackRock's iShares Bitcoin Trust, for instance, along with other funds, have pulled over 1 million Bitcoin into cold custody, cold storage, in record time, sometimes absorbing more coins in a day than miners can even produce or keep up with. And on the biggest days, ETF inflows alone are enough to tip the balance and tighten supply even further. All of these factors combined are stacking up when long-term holders, public companies, state governments, and ETFs all lock away supply at the same time. The market hits a real supply shock. Suddenly, there isn't enough Bitcoin left for a new buyer to get in at today's prices. Every coin that leaves an exchange is one less the market may ever see again. This is Bitcoin's new era, a strategic reserve asset, fiercely protected by those who understand its scarcity. With each passing day, the pressure only grows. And as this supply shock builds, it's about to send ripple effects across Ethereum and the altcoin markets, setting up the next wave of opportunity for anyone paying attention. But now let's talk about Ethereum, the building pressure under the surface that's happening right now. Because after Bitcoin's surge and the ongoing supply shock, there's growing attention on what's happening with Ethereum and in their ecosystem. We know that Ethereum is the world's second largest blockchain. And right now, all eyes are on ETH as it quietly builds pressure beneath the surface. And on the charts, Ethereum is showing classic signs that traders watch during major market cycles. Analysts point out that ETH is currently oversold, meaning recent price drops have been sharper than normal, often a setup for strong rebounds. Others, on the other hand, highlight that Ethereum's daily trading patterns are forming a broadening wedge, a technical formation that in past cycles has sometimes marked the bottom before big rallies. But it isn't just about the charts. Underneath the price action, Ethereum is seeing steady steam and inflows. New data shows that while the price has been flat or even sliding, large holders are still adding to their positions, and fresh capital is moving into Ethereum at a healthy rate. In fact, one expert put it simply. He said, "Don't look at the price. Look at what people are doing." It's a reminder to us that sometimes the biggest moves in crypto start quietly, with accumulation happening before the headlines catch up. The sentiment amongst experienced traders is also shifting. There's a growing chorus suggesting that Ethereum is entering a phase similar to what we saw early in the early bull markets, a period of low excitement and low prices, just before momentum and returns in full force. The Wyckoff method, a popular framework for timing cycles, has even signaled a go for Ethereum, hinting that a new accumulation phase might already be underway. All of this is happening while the wider markets are still digesting Bitcoin's run and the impact of the supply shock. As capital rotates and attention shifts, Ethereum could be setting up for its own breakout moment. The pressure is building, guys, and the next phase may catch many off guard. With Bitcoin and Ethereum both showing powerful underlying trends, history tells us that when these two assets start making strong moves, attention eventually turns to the rest of the market. That's why it pays to watch what's brewing among altcoins in connection with the larger macro picture of the world, in news, regulation, and geopolitics. Because in every single cycle, new opportunities tend to emerge, often when most people least expect it. And right now, data shows the altcoin season indicator is at its lowest point in 2 years. Bitcoin has dominated the market narrative for weeks now, while most altcoins have stayed quiet, overlooked by the crowd. But if you look back at past cycles, this setup is nothing new. Each time the altcoin season indicator dips to these levels, it's signaled that the crowd is focused on the big names, usually just before a major shift. Crypto history shows that when this setup appears, the total market cap has surged 10 times, 3 times in the last decade. It's a reminder that even when enthusiasm seems absent, the groundwork for the big moves can be quietly forming. There are also signs that public companies are getting involved in altcoins in a way we haven't seen before. Large firms, for instance, are starting to accumulate positions in projects like Solana, giving strength to the idea that select altcoins may be drawing serious institutional attention. Chart patterns across the broader market are also showing a familiar breakout pattern or setup. So what does this mean? Over the past decade, the total crypto market has spent long stretches trading sideways, moving up and down with a horizontal range before finally breaking out to the upside. This is the third time in 10 years we've seen this kind of structure, a wide flat base followed by a surge of momentum. In each of those moments, when the market finally breaks out through resistance, it doesn't just recover, it expands rapidly, leading to some of the biggest bull runs in crypto history. But even with all this potential, altcoins haven't even made their move yet. The market is still in Bitcoin's orbit, and capital rotation often takes time. Veteran traders know these periods can test patience. Still, for those tracking the data, it's clear that altcoins have a history of coming alive after long stretches of silence. The key is being prepared for these moments rather than chasing them after the fact, because at that point, it will be too late. So as we continue to monitor these market signals, remember that new narratives, sectors, and technologies can emerge at any moment. And the best opportunities often show up right when the crowd has stopped paying attention or has given up. So in closing, and as a recap of what we talked about today, because I know we covered a lot today, the world is facing serious macro uncertainty, from geopolitical tensions to energy markets that could shift overnight. Through it all, though, Bitcoin continues to be quietly accumulated, being purchased at unprecedented rates by smart money and smart whales, all of which is setting the stage for a historic supply crunch. Meanwhile, Ethereum is starting to show real signs of strength beneath the surface, hinting that a new chapter may just be around the corner. And as always, when Bitcoin and Ethereum start building momentum, the altcoin market gets interesting. So it's time to pay attention, even when things seem quiet and extremely uncertain. So that's a wrap for today's video. Thanks for watching and joining me today. My team and I work extremely hard to bring you the best information, unbiased, as informative as possible to help you know what's going on in the market, connect the dots, and be prepared for this bull run. So if you found value in this episode, I would just ask you like the video. It means so much to me. It keeps me encouraged to keep coming to you every single day, Monday through Friday. And then, of course, share this video with a friend or family member that doesn't know what's going on and is completely frightened. This could be something that helps them understand the opportunity that they have and that it's not too late. So anyway, guys, I love you very much, and I'll catch you guys in my video tomorrow.